Take two.
At the end of the day, they'll grade slides relative, so
Go. Should you go home today and find that your refrigerator has spoiled, there's only one retailer that allows you to order a new refrigerator at a click and have it delivered to your house. Even if you don't choose to do so, thousands over other consumers over Southeast Asia are doing that and can consider buying the stock. Good afternoon, ladies and gentlemen. My name is Eugene, and together with me, I have Jingren, Desmond, and Ronald, and we make up One Capital. We are pitching for Courts Asia with a target price of $1.01 with a 24.7% upside. Courts is a leading electrical, IT products, and furniture retailer in Singapore. With over 75 stores in Singapore and Malaysia, it has the #1 market share in Singapore and #2 in Malaysia, with which it derives 62% of its revenue from Singapore and 38% from Malaysia. The interesting thing about Courts is that it extends this credit option to allow its clients to buy goods at low interest installments, of which 83% of its revenue is derived from the profit margins of each good, and a good 17% is earned on the interest margins of each good. A quick look at the timeline shows that it delisted in 2007 and was relisted again after restructuring. Looking at the stock price, it opened at 80 cents since IPO, went up to a high in June, and is now back at around IPO price. We give a buy call with a target price of $1.01 and a 24.7% upside. The three key reasons why we make our call is that Courts is a differentiated business model. Unlike all its other competitors, it is, with its large market reach, it is most well positioned to tap on the Southeast Asian emerging market consumer story, and it has better margins than any one of its peers. For a retailer to be successful, it has to have a large market share, differentiation in product and services, and also a very strong brand presence. As we look at if you look at market share against product differentiation, we see Courts at the top rung of this chart. The key factors which make Courts stand out against its competitors is #1, multi-channel distribution. Courts is the first among all its competitors to put all its sales online to all its Singapore and Malaysia customers. #2, it has a strong brand and multiple product offering electrical products, IT, and electronic and appliances, all together with enhanced services to give the consumers a holistic experience. It also has an in-house credit facility where it reaches out to more consumers, especially to those who do not have credit cards and also those who want to buy big ticket items. This gives it a larger gross margin than all its competitors. While extending this credit facility, it has good and effective capital management, where the non-performing loans has been decreasing in the past 6 years. It also securitizes its receivables to ensure the foreseeability of its receivables cash flow. On our operating efficiency front, the average sales and revenue per square feet of Courts has been increasing in the past years, made possible with cost efficiency measures as well. Capitalizing on these strengths, Courts has an edge over its competitors, with which we will leap into the Southeast Asian consumer story, where in Singapore we will retain leadership, in Malaysia we will expand market share, and in Indonesia we will penetrate successfully. In Singapore, given growing housing and population figures in Singapore, while Courts is the market leader in a competitive environment, Courts has a wide market reach due to its expansion into heartlands and aggressive marketing strategies in the past few years, with which Courts is seeking to retain its leadership in Singapore by increasing its sales per square feet, while at the same time growing one store per year. As we look into Malaysia, it hopes to expand its market share. As retail growth is expected at around 4% amidst a growing population, currently Courts is second in terms of market share. It has been growing aggressively at 3 to 5 stores per year and is expanding at a faster rate than all its other peers in the industry, thereby gaining greater market share. It hopes to target densely populated areas like Klang, and going forward, it aims to further expand its market share by a fast expansion of 6 stores a year, and at the same time introduce its largest concept store, the Big Box. In Indonesia, it hopes to penetrate this high potential market successfully. We are looking at a market value of 5.2 billion and also a CAGR growth of the industry at 15%. With 90 million households joining the middle class in the years to come and the increasing size of the urban population, Courts seeks to target the newly minted middle class population in Indonesia who are increasingly affluent. It will locate its large big box stores in shopping clusters of eastern and southern Jakarta, thereby gaining brand prominence and giving customers a holistic Courts experience through these large stores.
after hearing all the qualitative stories from Eugene, let's look into the financials of Courts. first thing we would like to draw your attention to is that 17% earned service charge that Eugene has mentioned. If you actually look at the gross margin, the sale of goods for Courts, it's actually incomparable with its peers. It's about 15% comparable to its peers. But when you actually add the additional service charge, what you actually see is gross margins now go up close to 30%. Essentially, Courts gets that margin uplift from carrying out its credit sales. Next, you actually want to look at Courts' inventory turnover as well as payables. When you actually look at its turnover, the inventory turnover days is 47 days, while the payable is 87 days. What this essentially means is Courts actually turns over its inventory twice before it actually needs to pay its suppliers. And what this also means is that Courts, because of its strong relationship with its suppliers, which gives them good payable terms, actually funds its inventory through its suppliers. Next, you actually want to look at the credit sales. When you actually look at the credit, what you actually notice is that on average it is about 900 to 1,000 days, which is about 3 years. What this also means is that when Courts issues a new credit sale, on average customers take 36 months before they pay. And that means that Courts actually earns an interest of about 3 years. Next, the question will be, considering that Courts has it for 36 months or 3 years, you'll be concerned that what is the receivables like? So for Courts, their receivables is about 70% of assets. And at 70% of assets, as an investor, you would be asking, how about the impairment? Isn't there an impairment risk? Yes, there is indeed an impairment risk. But we would like to draw your attention to how Courts has actually managed its impairments since 2007. From a high of 15% and 4.5% respectively, Courts has actually lowered their impairment to about 4.5 to 2.5% respectively. And this was done through more stringent credit policies, tightening of credit. And so if you actually look at the debt to equity, management has started to take on more debt to increase the return on equities to their shareholders. And we at One Capital believe that this leverage level is about optimum for the company, because if you are lower than this level, it will not achieve the optimum return on equity that you want. But at the same time, if you take on too much leverage, you run the greater risk of impairment. So we think about this 14% to 50% is about optimum for the company. Looking at the revenue going forward, here is where we differ from the street. While most analysts on the street are quite bullish about Indonesia, we at One Capital are bullish. But what we differ is that we say that Indonesia does not really matter is not such a big factor at this point in time. Because if you actually look at the next 5 years, Indonesia accounts for only about 10% of revenue or EBIT. So despite all its hype, Courts is still largely a play on Singapore and Malaysia.
Looking into Courts' LEAP strategy in Southeast Asia, we forecast revenue, gross margin as well as operating margin based on its 3 distinct geographical sectors, and these figures will in turn flow into our valuation. For revenue, we believe 2 key drivers will be retail area as well as same-store sales growth, and it will result in a revenue growth of 7.4% CAGR. Gross margins are driven largely by the cash credit mix, and we forecast a gross margin of 31.5%. Operating margins will be driven by impairment of receivables as well as selling, general and administrative expenses, and we forecast the operating margin of 8.7%. These assumptions flow into our free cash flow to firm valuation, resulting in a target price of $1.01. In order to do a sanity check on these figures, we compute the implied PE as well as the implied forward PE for Courts and compare it to its historical PE range. Considering a historical range of 9.1 to 15.2 times, we feel that the target price is reasonable because the implied price to earnings ratios are reasonable as well. Furthermore, we compared Courts with its peers with regard to its price to book as well as its forward price to earnings ratios. Considering the fact that it's significantly below the average, we feel there's room for Courts to grow in valuation, and we remain bullish on the stock. Moving on to the bear bull case scenario. The bear case scenario shows a negative 5% downside risk, whereas the bull case scenario has a up to 50% upside risk. As such, we are confident that Courts will be able to fulfill its $1.01 forecast, and we remain bullish on the stock. Moving on to risk analysis, we identified 3 key risks for Courts profitability. Firstly, interest rate risk, then increased delinquency rates, and finally, foreign exchange risk. I would like to draw attention to interest rate risk. As we all know, the world economy is increasing, which would result in increasing interest rates. This increase in interest rates would reduce profits as Courts is unable to flow these interest rate increases onto its consumers. In order to mitigate these risks, Courts is raising its debt on fixed rate and long-term durations, and this will allow it to lock in its low interest rates for a longer period of time. In conclusion, we feel that Courts, with its low valuation resulting in potentially significant upsides,
differentiated business model with strong supplier relationship and sound credit policy,
Courts will capitalize on these strengths and leap into the Southeast Asian consumer story, thereby allowing us to derive our target price of $1.01 with 24.7% upside. Thank you, and we may now take your questions.
Is it by 15 seconds? My bad. I need to. I cannot be true.